Hello. Should you invest in shares or property? Shares have done really well in the last 12 months. But when you look at the detail, over 80% of the growth in shares is due to the explosion in the value of AI shares, even though these companies are actually making huge losses and will continue to do so for many years. Many people are thinking about investing in shares right now, but they're worried if this is indeed a boom that could pop, resulting in immediate losses. And there are many others who already have shares and are wondering if now is the right time to sell them to get a lower risk long-term investment for their retirement and family security. And when you compare shares with UK rental property, there are significant issues. People feel the risk is higher with shares and is more acute. There is no steady income. You typically have just capital growth in the value of shares. You can't leverage your money like you can with property by using mortgages or use them to release equity. And you have no control over the business you're investing in. All you can do is simply sell the shares, whereas a property can be developed and enhanced to raise its value and rental income. In this video, I explain why investors looking for long-term retirement type income and family financial security are now considering UK property, particularly low-cost, affordable freehold houses in the north of England. I'll cover 5 reasons why such property is now amongst the best forms of investment. And at the end, I'll also cover the biggest single issue with rental property and how to overcome it. If you find this video useful, please tap the like button and subscribe to our channel. We release UK property investment videos every week. So I'm going to cover the 5 top reasons why investors who want to shift from paper investments such as shares, funds, bonds, and bank savings into real long-term physical assets are now considering UK rental property in the form of low-cost freehold houses. The first is steady passive rental income. There's a culture of rental in the UK with up to 35% residents renting their property, and the majority are in the private rented sector. Rental demand has increased as renting has been made more attractive by a recent Renters' Rights Act with higher property standards and energy efficiency regulations. Supply, on the other hand, is expected to become tighter, and new house building continues to fall behind population growth. Thus, rents are expected to continue to increase. Net rental yields of 7% after all costs are possible with low-cost freehold houses. That means a full 2-bed freehold house costing under £80,000 can deliver a regular net rent of £5,600 per year after all costs. The second reason for choosing property is steady long-term capital growth. I've looked at capital growth in the UK in detail over the past 70 years. And yes, it has been affected by recessions and world events, but overall, the effects have been minor. On average, house prices in the UK have doubled every 12 to 13 years with steady long-term growth. And this has surprisingly been true in all areas of the UK over the long term. Houses in prime areas of London and the cheapest areas of the north have grown at very similar rates when you average over the long term. Now, many believe that growth in the next 20 years is likely to be better on more affordable houses, as these will be in the highest demand in the future. Thirdly, in general, property, particularly UK rental property, is regarded as low risk. The UK offers long-term political stability, strong institutions, and a well-regulated property market, which reduces long-term investment risk. It has the most established and transparent legal system for property ownership. Investor rights are clearly protected, contracts are enforceable, and the land registry system provides a certainty of ownership. Houses in the UK are freehold, where you own the land as well as the property, with no hidden costs, ground rent, or service charges. Suitable residential property is a secure, tangible asset that grows over the long term, is really useful in that it provides somebody with a home, and gives good rental income. It's an asset you still have even if the financial world collapses. Fourthly, in the north, properties are more affordable. In fact, the best investment property in the UK are affordable, low-cost freehold houses in the north of England. Investors can buy a two-bedroom freehold house that is fully renovated with long-term guarantees and rented to good tenants for under £80,000 with net rental income after all costs of over £5,600 per year. Low-cost houses deliver higher rental yields and are expected to grow better than more expensive houses in London and the south. They're affordable even without a mortgage, and instead of buying one expensive property, investors can buy multiple low-cost houses for the same budget, and these reduce investment risk, provide more flexibility, and enable them to build their portfolio gradually in a stepwise manner. And finally, UK property is tax efficient. Now, many people are surprised by this statement, but it's true. For example, many non-residents still have access to the UK personal allowance. This means that a couple can earn over £25,000 in rent and still not pay any tax. They can thus own up to 4 low-cost houses in the UK and still not pay any income tax because each person has £12,570 of tax-free income. Even high-rate UK taxpayers can structure the property investment through a family investment company to minimise taxes and reduce or eliminate inheritance tax. I cover in other videos how large property portfolios can be built in this way very tax efficiently. So there are indeed many clear reasons for investors to switch from paper investments such as shares and consider UK rental property for long-term investment and family financial security. And now I'm going to cover the main disadvantage of UK rental property and also cover how this can be completely removed. Now, the problem is that normally owning UK rental property is not 100% passive. The investor acts as the landlord and has liabilities to the tenant and has to maintain the property in a good condition. There are costs, tenant problems, and landlord headaches. But there is a way to own the property 100% passively without taking on the liabilities of the landlord or having to deal with tenant or property maintenance issues. They can do this by buying the rental property and immediately renting it to a professional company, such as the sponsor of this video, who agrees to become their tenant and takes on every cost and every liability and pays them a fair rent. The company then acts as the landlord and sublets to their own tenants to get a higher net rent than they have to pay the owner and handle the maintenance, compliance, arrears risk, tenant issues, and all the liabilities under the Renters' Rights Act. Investors simply get the agreed net rent regularly with no surprises and no involvement. The company can do this by being efficient and having processes to reduce all of the landlord costs. Unlike a letting agent, the company is responsible for paying all the costs, so they work harder to keep these low. They can thus pay the investor a good net rent, but still cover their costs and be profitable overall. UK property gives good income and steady long-term growth with low geopolitical investment risk. It's a secure, tangible, physical asset that you possess and which is still there even if the stock market pops or even if the financial world collapses. This 100% passive system removes the main fear and obstacle to converting your paper investments and savings to UK property. Please watch the short message from our sponsor at the end on how this passive system works. Thanks for watching. Freehold houses in the north are the best form of UK property investment. They're affordable, deliver higher rental yields, and are growing at 6% per year. And here's an amazing offer from our sponsor.
Most investors spend £120,000 on one property. This deal gets you 2 houses from our range and effectively get the larger one at less than half price. It also hands you legal ownership of both houses today and delivers over £1,000 net rent every single month. Let that sink in. Same budget, but instead of one asset, you get 2 freehold houses registered in your name immediately. Take the two-bed H2 option, each valued at £86,000. With this amazing offer, the total package price you pay is just £120,000. That's a huge discount of more than £51,000. You enter a rent-free period of 4 years and 4 months, which at first might sound like a drawback, until you realise that the future rent is what's funding the deal and getting you a second property for less than half the normal price. No interest charges, no complex financing, just a clean, structured arrangement. Once that 4-year, 4-month period ends, you're collecting over £12,000 net rent per year. That's a 10% net rental yield of over £1,000 a month after all costs and fees. Nothing more to pay out. For bigger budgets, the 2-bed and 3-bed combo includes our top-of-the-range 3-bed semi-detached house, which we normally sell for £129,000, but you get it for effectively half price at £64,500. With this combo, the net rent amount jumps to over £15,000 annually. Any combination of the 7 eligible property types lands you at roughly 10% net yield. Prices are rising on low-cost freehold houses in the north by around 6% per year. Our prices are increasing in the summer by £2,000 per property. If you make a reservation this month, we will honour the current price even if completion is after the price increase. Visit Find UK Property and talk to a consultant today.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension-type income or gradually build large property portfolios passively in a tax-efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.